Hey there, Krystal A, CPA here, and in today's video, I'll be going over new 2022 tax law changes that will apply to your tax return that you filed this year. Most of these changes will apply to each and every taxpayer, so it is super important that you are aware of them. And I know sometimes you may just hand over your tax documents to your CPA or preparer, and they just hand back your prepared return. You sign it and either pay the taxes due or wait on your refund, right? Well, I want to empower you here a bit today and inform you of some tax law changes that will impact your return and may change the way you file your taxes. And some of these changes your preparer may or may not inform you of. So if you want to understand your 2021 tax return a little better, then make sure you watch this entire video, and please do me a favor and hit the like button for me and comment any questions or thoughts that you may have throughout the video. Now let's get started. The very first change you should be aware of is that income tax brackets were increased. Income tax brackets were increased to account for inflation. Your income tax bracket determines how much tax you'll owe based on your taxable income. Here are the income tax brackets for single and married filing joint filers for tax year 2021. Compared to income tax brackets for single and married filing joint filers for tax year 2020. As you can see, the IRS kept the same income tax percentages, but the income limits have changed. For example, married couples who earn more than $414,700 were taxed at a rate of 35%. Whereas for tax year 2021, those same couples are taxed at 35%, starting at an income level of $418,850. So we're seeing an income increase in each tax bracket. So basically a taxpayer can earn a little more income and still be in the same or even lower tax bracket. Next, the standard deduction has increased. For tax year 2021, the standard deduction for single filers is now $12,550, compared to tax year 2020, where the standard deduction for single taxpayers was $12,400. The standard deduction was also increased for joint and head of household filers to $25,100 and $18,800 respectively. Next up, the charitable donation deduction expanded to $300 per person. So if you are a taxpayer who files jointly, you can now claim $600 on your tax return, even without itemizing your deductions. Whereas before, only $300 in total in charitable donations could be claimed per return without itemizing. The next 2022 tax update relates to the child tax credit. As we know, the child tax credit is designed to help working parents with childcare expenses by allowing them to claim a tax credit per qualifying child. The American Rescue Plan Act increased the credit amount to $3,600 per child under 6, up from $2,000, and it increased to $3,000 per child over the age of 6, up from $2,000. Also, the credit was made fully refundable, which means the credit amount is refunded to the taxpayer regardless of how much the taxpayer's liability is. But do keep in mind that if you received advance payments in 2021, that those payments are counted against the total credit you claim. So if you received $1,800 in advance payments, you can only claim the remaining $1,800 on your tax return. Likewise, if you opted out of those monthly payments altogether, you can claim the full amount when you file your tax return this year. Another update regarding your 2021 tax return is that no taxes would be due on forgiven student loans. According to the American Rescue Plan Act, which was signed in March 2021, if you were able to get a portion or all of your student loans forgiven in 2021, you are not subject to taxation on the forgiven amount. This was not the case before March 2021, where if you had your student loans forgiven, you would owe tax on the amount because the forgiven loan amount would actually be added to your income. Another change that may impact your tax return is that the earned income tax credit has increased. This credit is for taxpayers with low to moderate incomes. And here are the new credit amounts. Next, you may qualify for the Recovery Rebate Tax Credit. If you did not receive a third stimulus payment or received less than the full stimulus amount, or $1,400, you'll definitely need to file a 2021 tax return, even if you are not usually required to do so. The third stimulus payment is for individuals who earned over the standard deduction amounts and who are not claimed as a dependent on someone else's return. To confirm the amount of your third stimulus payment, you will receive letter 6475 from the IRS early this year showing the amount that was paid to you. You can also check this information online at irs.gov. To claim the stimulus on your return, you need to complete the Recovery Rebate Tax Credit worksheet to request any additional payments you may be owed. The last new 2022 tax update is that tax breaks related to unemployment benefits was not renewed. There was temporary relief for taxpayers who received unemployment benefits in 2020. Previously, the first $10,200 of unemployment compensation was considered tax-free on your 2020 tax return. This tax break was not renewed for the 2021 tax year, so if you collected any unemployment compensation in 2021, it is subject to full taxation when you file this year. Now, the IRS reminds us to not file our tax returns before ready, since you want to make sure to receive all of your tax documents so you can file an accurate and complete return. Documents such as W-2s, 1099s, and IRS letters like the one I mentioned before regarding stimulus payments. As always, try to file electronically and pay and receive your taxes through direct deposit if you can. I hope this video was helpful for you, and I'll see you in another one.